The concept of fintech is no longer new. It became popular after the 2008 financial crisis when people were devastated and lost trust in the traditional financial services and the banking system. People then looked for alternatives such as fintechs for their banking needs, and even though the concept of fintech already existed, it really blossomed after the financial crisis, and by 2014, Deloitte reported that there were over 742 fintechs that were started. Now, by this time, investors had taken notice, and the startups with a focus on fintechs attracted lots of funding and were able to scale their services to reach millions of people. The reach of fintech extended globally and began to play a pivotal role in the global economy. The traditional institutions like banks themselves started creating fintech subsidiaries as part of their digital transformation drives, and today we have fintechs that have high valuations and serve as many customers as the incumbent institutions that have been around for centuries. Today, fintech has played a significant role in digital banking, from giving us the convenience to send and receive money to and from any part of the world, to making online purchases from the convenience of your smartphone. This is all thanks to fintech. However, despite the fact that fintech is now a part of your everyday lives with a defined industry, there are many people with reservations and major misconceptions about fintech and the fintech sector in general. So in this video, we'll seek to discuss and clarify some of the most common myths surrounding the concept of fintech. Stay tuned if you're keen. Hello friends, welcome back to the channel. My name is Jeremy, and if you're new here and haven't yet subscribed, please consider doing so, because on this channel I speak about agile transformation, digital strategy, and personal development. Now, for those of you who are regulars on the channel, you already know that fintech is a topic that I speak quite often on. However, for the one or two people who may be in the back and may not be familiar, fintech is simply the coming together of the finance and technology sectors to offer innovative services to meet your financial needs. I have a full video linked on that if you want a more detailed introduction to fintech. Fintech has been in vogue and flourished for a number of years now. If you have ever performed or accessed financial services without having to leave the comfort of your home to go to a brick and mortar branch, then you've most likely used a fintech product in some shape or form. Digital wallets, digital credits, online payments, remittances are all examples of areas where fintechs have blossomed. However, the misconceptions about fintechs still linger, so let's jump straight into clearing the air and bringing some more clarity to some of the major myths surrounding fintech, starting with the first and most common, that fintech is going to end banking. Now, this is probably the most frequently passed around statement by fintech enthusiasts globally. The discussions are never ending as to the type of competition that exists between traditional banks and fintechs. We keep hearing of the disruption of the financial sector, and that leads people to believe that fintechs will either take over or the banks are going to stifle the growth of fintechs so they can maintain their positions. Now, I suppose it may also be the misinterpretation of certain quotes by popular industry players such as Bill Gates, when he says things like banking is necessary but banks are not. But it's safe to say that the narrative that fintechs are bringing an end to banking is a myth. Fintechs have been around for well over a decade now, with reach and valuations that are sky high, yet we still have banks very much in existence today. Traditional brick and mortar banks have been around for a very long time and are very experienced in the industry of finance. The financial crisis of 2008 resulted in banks falling under heavy regulations and scrutiny from the authorities in order for them to maintain their stability and trust as an institution. Now, on the other hand, the fintechs are the cooler, more tech-savvy, agile, and flexible newcomer that has greater customer-centric orientation. Now, each of these players are unique in what they bring to the table, and each has something the other doesn't, which makes them more appealing to different demographies of the population. This is why we're less likely to see fintechs, in quotes, bringing an end to banking, but rather collaborating with banks to leverage the synergy to rather evolve banking. Now, advances such as artificial intelligence, machine learning, algorithms, big data, blockchain are already transforming financial services, and fintechs are taking advantage of these to deliver products in more bespoke ways. Only the banks that are opposed to change should have any concern about fintechs, but once they change that mindset, they will realize that fintechs complement banks and enable the customer to obtain more competitive services. In fact, A PwC report indicated that 82% of traditional institutions plan to increase collaboration with fintechs over the next couple of years. Now, the next is that fintech is a bubble that will burst soon. Now, whenever there's a revolutionary technology that comes up to introduce unconventional change, there are always the naysayers who immediately jump to calling it a bubble. This is what they did with the introduction of the internet, with cryptocurrencies like Bitcoin, and even now with fintech. A bubble, for those who may not understand, is a term given to a temporary phenomenon that is apparently fueled by hype and is expected to die down when people realize there's no fundamental value. However, as of August 2021, there are over $157 billion valued fintechs globally. The fintech sector is worth over $4.7 trillion, and especially during the pandemic and its accompanying lockdowns, we saw firsthand how fintechs turn out to be a lifesaver for most people in both the developed and developing worlds. Fintechs kept families and businesses afloat and seemed to be better prepared for the pandemic than traditional players who had been around much longer and experienced other forms of crisis. The pandemic rather increased the popularity of fintechs because even though they offered essentially the same services as traditional banks, they employed digital channels that seemed to be more pandemic-proof when our movement was restricted. So for example, if you wanted to open a bank account or make payments or receive credit during the lockdown, you could easily do it online thanks to financial technology. Now, does that sound like a bubble to you? Next is that fintechs are more prone to cyber attacks. Now, being very objective here, at least this is a misconception that has some substance to it compared to the others. Fintech does deal with money, usually transacted online, and that definitely attracts the attention of cyber criminals and hackers. What I think people fail to grasp is that even though cybersecurity is definitely a significant challenge, advanced technology is the great competitive advantage that fintechs have. Fintechs are able to use technology such as big data, cloud computing, AI to determine the behavior pattern of fraudsters and stop them before they happen. Fintech companies are constantly working with ethical hackers, cybersecurity experts, and other specialists to constantly stay ahead in terms of security of their servers and customer data protection. Now, compared to traditional financial institutions such as banks, who use security firewalls that tend to be a bit archaic or obsolete, you're better off transacting with a fintech, at least from a security standpoint. Now, online technologies are enabling fintech providers to use the fastest and most convenient online platforms whilst also leveraging sophisticated cloud-based security systems. So the next time you opt to use some alternative fintech platform to make an online purchase of clothes or groceries or simply to transfer money, just know that your chances of being hacked are far less than if you went the traditional banking route. The fourth is that regulations will kill fintech. Now, the fintech industry is experiencing significant expansion. Now, around the clock, new technology and innovations are being discovered and deployed, and not everything is standardized. The government regulations governing fintech can be stringent and sometimes a barrier to progress. However, if you believe that regulations will eliminate fintech, then that is a misconception that needs to be debunked. Regulation of financial services is not light. It's heavy because there are millions or billions of funds belonging to people that needs to be protected in order to build credibility and trust for the system. But that does not mean that innovation within financial services is overlooked or frowned upon by regulators. On the contrary, we now have regulators who are creating regulatory sandboxes to encourage innovation with the right safeguards in place. The regulators themselves provide the supervision and vigilance for new financial technologies and products to be tested, so any risk can be identified and mitigated early on. Now, this also allows the regulators to learn more about the technology and its use cases in order to frame policies that better apply to fintech. I have another full video on regulatory sandboxes linked, so you can check that out if you want to learn more. However, it's safe to say that there has been increased collaboration between fintechs and regulators, which brings mutual benefits and contributes to the sustainability of the fintech industry. And finally, the myth that only younger people use and trust fintechs. Now, this final misconception is essentially because fintech is a heavily technology-driven industry, and the new channels are assumed to bring about more complexity for the older demographic who aren't as tech savvy. It's important to note here that fintech isn't limited to standard banking features. There are different types of fintech companies and platforms used for money transfers, payments, budgeting, equity financing, peer-to-peer lending, trading, etc. So there are a wide range of services offered by fintechs that should appeal to different age demographics. As time goes on, people will begin to improve their digital literacy and find their personal use cases for fintech products. As with any other service, once the value provided is clear and useful, it will eventually become widespread as more and more people begin to use them. So friends, those are 5 of the common fintech misconceptions and myths regarding fintech and the fintech sector. The popularity and demand for fintech will continue to grow as the world begins to become increasingly more digitalized. The fintech sector is relatively young compared to incumbents like the banks. However, with increased collaboration, we're going to see even more advancements as fintechs continue to tackle some of their biggest challenges, such as cybersecurity. Fintechs will continue to earn the trust and confidence of the public, and we're going to see more advancements in that field. I hope you found this video valuable, and if you did, remember to hit the like button and leave me a comment. Very soon, for those who are interested in my marvelous outfits, I'll be having an affiliate link so you can purchase them online. I hope to see you in the next video. Cheers, guys.